Coming to the second topic of today's discussion, which is regarding the resignation of chairman from HDFC Bank. Now, HDFC Bank is a systematically important bank, a domestic systematically important bank, which means it is too big to fail. If something happens to HDFC Bank, it can has a effect on the entire economy of India because of the size of this bank. So anything happening around these domestic systematically important banks, it is of importance to us in the form of your economy section and banking within economy. So what happened recently? There was a sudden resignation of Atanu Chakrabarti as the part-time chairman of HDFC Bank. He was also an independent director of HDFC Bank in the board of directors. So he resigned. Basically, this shows massive value erosion of the bank stock. The stock fell by 5 to 7%, which eroded a lot of wealth of people because a lot of mutual fund houses and retail investors, they hold HDFC Bank share. Now, certain happenings and practices within the bank that I have observed over the last 2 years are not in congruence with my personal views. This is what Mr. Chakrabarti said while resigning. He said certain practices are being happening in bank which do not align with my personal ideas that how a bank should be governed. But it does not mean that some fraud is happening in the bank. The bank is completely well run. It's just like the board may be proposing, or you can say Mr. Chakrabarti as chairman of the board may be proposing some other strategy. The bank management might be going some other strategy. So that's why he must have resigned. Now, HDFC Bank is a domestic, systematically important bank with sound financials, professional run board, and competent management team. The bank remains well capitalized and financial position of the bank remains satisfactory with sufficient liquidity, said by RBI. Because this is such a large bank, so many stakeholders are there. Yesterday only, the bank and RBI both did a conference which clarified this issue, and RBI appointed KK Mistry as the part-time chairman of this bank. Even KK Mistry, being 71 years of age, and earlier he was the chairman of HDFC previously also. He has a long record of banking. He is a very ethical administrator. He said that had there something be wrong in the bank, I would not have staked my image by taking this position. So he says all things are fine. So through this article, what we need to study, we need to take care of the things that what is domestic systematically important banks, which banks are designated as DSIBs. So these are the banks which are too big to fail. If they fail, they will take the entire economy into shambles. Now their failure can disrupt the entire financial system. They are identified by RBI in India. RBI is the authority which gives this status to any bank of being domestic systematically important bank. Based on the idea of systematic risk, just like how in 2008 a lot of banks crashed in US. We does not want similar situation in India. To protect that kind of situation, this designation is given. Large banks, generally they have high interconnections among different industries, different sectors. They have large customer base. They have crucial role in the economy. So that's why they are designated systematically important. Then their failure can lead to a contagion effect in the entire banking system. RBI framework, this was introduced in 2014 based upon the size of bank, its interconnectedness, substitutability, and complexity. If a small bank is there, it can be easily substituted by some other bank, but these large banks cannot be easily substituted. Now they propose a bucket system where the buckets are classified from 1 to 5. Higher the bucket, higher the risk, and more capital will be required additionally to safeguard them. Although these are the safest banks, but still within safe you have some kind of risk. So what are the DSIBs in India? RBI has designated SBI, HDFC, and ICICI. These three are the domestic systematically important bank. One public sector bank and two private sector bank. In 2015, first SBI was designated. In 2016, ICICI, and 2017, HDFC was designated systematically important. Clear? SBI is in the bucket 3. That means they require higher additional capital. Let's say 0.4% of the whole capital of bank, and HDFC and ICICI in bucket 1, which requires 0.2% of additional capital. These are too big to fail. Now, what additional requirements they have because of their size, because of their sensitivity? They must maintain higher common equity ratio, CET1 capital. This CET1 capital is bank's core, highest quality regulatory capital, primarily comprises of ordinary shares of bank and retained earnings. Whatever bank has earned, they put a section aside as common equity tier 1, the highest quality of equity. So this additional amount is kept aside so that in future, if any fraud happens, if something happens somewhere, this capital can be used to stabilize the things. There is no bank run in the bank. Bank run is generally when people comes under panic and they start withdrawing their money. Now this CET acts as a primary loss absorbing buffer against the financial distress. Whenever there is some loss, this capital will act as a buffer. The minimum requirement ratio is 4.5 of the risk weighted assets under Basel III norms. Generally, the banking supervision, the international, you can say central bank of all the banks situated in Basel, it determines what should be the capital adequacy ratio or what should be the minimum buffer. This is the 4.5% of all the risk weighted assets. That means the bank has given loan somewhere, that is a risk weighted asset, it is a risk of not coming back. So but in India, the total CET1 requirement is 8%, much more than the norm set by the Basel. Clear? So in India, the requirement is 8, and these three systematically important banks, they require additional capital of, let's say, 0.4% or 0.2% above this 8%. Clear? Now we have global equivalents also, which are global systematically important banks. There are 30 such global systematically important banks. Now what you have to make sure is there is no Indian bank in this. No Indian. These Indian banks are too small to be part of global systematically important banks. You have examples like JP Morgan, Citibank, Bank of America, Bank of China, Goldman Sachs, etc. No Indian bank. They are identified by Financial Stability Board. Who created this Financial Stability Board? The G20 mechanism. G20 in the year 2009, they created this Financial Stability Board, which basically monitors and make recommendations on the global financial system. This was created in 2009, just after the global financial crisis, ताकि future में same crisis does not happen again. Now what are the exam traps? What you have to keep in mind for your prelims? These domestic systematically important banks, they are not identified by SEBI, they are identified by RBI. Now only public sector banks can become systematically important? No, both public and private, in fact more private, 2 private banks are part of it. Then they require no extra capital apart from the 8% authorized by RBI. Again wrong, they require additional capital, this additional capital. And then they are the same as NBFCs? Again no, only banks are right now described as domestic systematically important. No NBFC is part of it. Clear? So these are some of the exam traps which you can face in prelims.